So the stock market roller coaster ride continues as we opened up right around Friday's lows to retest them and took off from there again. Now it took a little bit, there was a little selling pressure early on, but the market has recovered exceptionally. And this really reminds me of what the late 90s looked like. Even when the markets opened lower, no matter what went on, they would struggle and end higher. So today I'm going to talk a little bit about, is the market manipulated? Because somebody had asked that in the question section, so I wanted to address their questions about that. Hello, my YouTube friends, and happy Tuesday. I hope everybody's doing well. My name is Adam Kahn, and this is Investing with Adam K. So, market manipulation, that's one of the things that I'm going to talk about in today's video. It should be really interesting, but I'm also going to talk about the roller coaster ride that's going on, and maybe even a little bit about Bitcoin and real estate and baseball cards and all sorts of things, because I am definitely seeing a bubble forming. But unlike the people on TV talking about it, I think we have a long way to go. So just be patient and keep an eye on things. So the question in the question section, or the comment section, that was asked of me is, are markets manipulated? And they were wondering, is the market just too big to be manipulated? Or do people come in and they're able to move things around? Well, the straight answer to that is no, the markets are not manipulated. And yes, the markets are manipulated. So what do I mean by that? Because I know that didn't really just answer the questions. Overall, no, the markets are too big. And the minute that somebody gets involved into a market, they become part of the market, which makes it really hard to manipulate it. Now, the huge funds have become so big that when they buy or sell a stock, they do drive the price in whatever direction they're doing it. And for the most part, a lot of them will trade S&P futures, which will move, and then in turn, they'll buy all the stocks in the S&P futures, which is all 500 stocks, or sell them. And the market kind of is too big. But on a daily basis, the companies will try to push the prices to get things to work the way they want them to. So let's go back to when I was on the floor, especially on a slow market. If nothing was going on, you would see the traders maybe bid the market up and offer it back down just to see if there was business going on anywhere. They were kind of manipulating it, but really because nothing was going on, not because they were actually able to really move the market. There is no way for a company to just alter pricing like that. They're only going to be able to do it if they're actually getting out of a position or getting into a position, and they don't really want to do that. It's not really feasible to think that somebody is just going to take a stock that is publicly traded and be able to mess with it and manipulate it, but they will try to on a minuscule level. Because what happens is, if they really try to, their position is going to get too big. So what I mean by that is, let's say you want to drive the price of something higher. So you start buying it to push the market higher. Well, there's a point where you're going to buy so many shares that how can you get out of it unless you just drive the stock right back down in order to get out of those positions. At the same time, if I have one position on and I know another person has another position on, we both might be trying to push it against the other person to try to squeeze them out of their trades, manipulating it more on a smaller basis. But if they really put a trade on to try to push it further than it should go, they're going to get stuck and they're going to end up losing money, making it nearly impossible. The interesting thing, and one of the things that I responded to, is whether knowingly or not, I do think that CNBC and similar end up manipulating it either by accident or on purpose with the things that they talk about in the news. Now, the people on there, they sign a contract and they are not allowed to own individual stocks. I think that's a really good thing that they put in to implement, just to show that there is no wrongdoing going on and they're all behaving properly. I think it's a little bit overkill, because I don't think just because they research, they have any better knowledge than anybody else. And markets are very hard to be able to figure out where they're going. But if you're Pfizer and you're a contributing guy, like I think it's the CEO who goes on there every now and then, Sure, when he talks about his company, that could drive people to buy the stock, pushing the price higher. But that's going to be very short lived and it's going to reverse and likely go back. Now, at the same time, if they're doing a story on Boeing and there's a plane crash that involved a Boeing plane, yes, that could push the market lower. Does that mean they're manipulating it? Perhaps if it's on purpose and they're doing it to benefit in terms of their positions that they have in investments. But if those are just the news stories and the markets are overreacting one way or another to the different stories being put out there, I'm not sure I would really call that a manipulation. The other thing is the markets are so intertwined with every other market that associates with each individual stock, as well as the S&P and the QQQ and the other indexes. That also makes it difficult, as well as options. So when somebody is trading in options, it's pretty much computers from what I can tell at this point. But I'll go back to when we were at the exchanges. My brother was an options trader in the stock options pits. He traded United Airline was the main stock, and then they have some peripheral ones that go with it. Well, when somebody places an order to buy a bunch of calls, so the guys on the floor are selling a bunch of calls, they use what's called a Black-Scholes model to figure out the amount of deltas they have on and then hedge that bet. So the client buys it, you sell it, you then look at your position. You've essentially sold calls, so you are short the market. You would buy the appropriate number of shares of stock to offset the shares that you just sold. Well, what it looks like to me is this has become monstrous computer algorithms that are consistently buying and selling different underlying stocks. The whole long reason for that explanation is that also works with the S&P futures, and that also works with a whole bunch of things. So when you're looking at whatever stock you're looking at, they're all moving based on the options that are trading, the S&Ps that are trading, and anything else that stock might be wrapped in, like if it's included SCHD or anything else to offset whatever trades are going on. So in that example, they've sold the calls, they're now buying the stock. Is that manipulating it? No. And you have so much of that going on to be able to be making the bids and offers that you see on your screen. That's kind of why it's so hard for somebody to manipulate it. Is it's not like it lives in its own bubble of a world. It lives in a world for the markets that includes the options and the S&P and everything else that it's intertwined with to move that stock. So it becomes exceptionally difficult for any one individual to be able to try to manipulate a company or a stock price. There would have to be so much colluding and so many other things going on to try to push it like that. On a day-to-day basis, yes, the funds are going to try to push a stock higher or lower based on where they want to put the position on. Maybe they think if it gets below some, like they'll do charting, and if they think they can drive it below a price that is then going to trigger some stops or something else that would allow them to reverse and take the other side, of course they might try to do that, but it is not so simple to do, and it takes a lot of power to be able to push a market like that. To think that somebody could push it day after day or week after week to really drive a stock to be out of alignment of where its actual value should be, I think is kind of unrealistic. I've had this conversation with a buddy of mine. We've kind of even gotten a little bit heated about it because he's convinced that there's like this room of people that push the market wherever they want to go, because why does everybody sell at the same time and why does everybody buy at the same, like, I just don't see that as a realistic scenario. There are not these little gurus back there deciding, all right, guys, let's get together and push it this way. It's just supply and demand like anything else. And generally what happens is the guys who trade it on a daily basis get loaded up in the same way, and then it goes against them, meaning selling comes in and they're all buying against it because that's what they do. Then some more comes in and they continue to buy, and then some more. And it's just natural paper flow until the guys that are considered locals, which are daily traders, are just long too many shares. And finally, they just give up and they reverse and they decide they need to get out. So they sell and it pushes the market higher, and then vice versa. And it's just this ebb and flow of people who are trying to make markets who didn't really necessarily want a position that get too long or too short and just have to get out of that position because that wasn't really what they wanted to do anyway. They were just kind of making markets. So, like I said, my buddy and I, we go back and forth. He gets really annoyed at me because he thinks it has to be manipulated. I just say markets are markets and they go wherever they go. And it's very hard to imagine that somebody has that ability to press it like that. The other reason that I say markets are markets and I try not to overthink it is it doesn't really matter. If you're trading, you have to react to the direction that the markets are going, and who cares if somebody's trying to manipulate it or not? You have to deal with the situation that's going on and adjust accordingly and not worry about the reasons why. Does it really matter why a stock is going lower if you bought it as a trade and it continues to drop? Or does it only matter that now you're long a stock that's going against you and you need to react the way you're supposed to? So trying to figure out is kind of futile. Like, what's the difference anyway? Does it make you feel better if you think that somebody manipulated it against you? Maybe it's just an excuse. I mean, people like to blame somebody else for what goes on. But I also think if it was manipulated like that, the funds would do a lot better than they do. Something like 95% of professional investors underperform the indices. So who's manipulating it if just the 5% that are successful? Hard for me to imagine that. It's just a difficult job. It's difficult to predict because nobody can predict the future, which is really what it's all about. Now, I also did want to talk specifically about the markets and what I see going on, because it is feeling, again, like an everything bubble to me. I am noticing that whenever there's a sell-off, the markets tend to reverse and go right back the other way. The other thing really interesting to me is that the crazier the stock, it seems like the further it's going. It still takes a long time because we have not drawn in the people who typically don't invest. Once you start drawing in people from the outside who are not typically invested in the stock market, that is when I will feel like it's gone too far. I don't know how many of you watch crypto or whatever else, but remember back when Shiba Inu was going on and Dogecoin and all the others, and maybe you went and did whatever you did, and some friend or somebody else had some story of like this kid who made hundreds of thousands of dollars from $1,000, and everybody started piling into all this stuff. That's a mania. That is kind of what I look for. It happened at beginning of COVID. I think we had a bit of an everything bubble, and it feels like it's building. And when I see SoundHound and OKLO and Robinhood and so many of them just beginning to like take off, to me it feels like that bubble is forming. And I think it will be an AI bubble. At the same time, unlike the analysts who continue to say it's coming anytime soon, I think we have a good 2 or 3 years of it continuing to build. Because what has to happen, in my opinion, and this is a good opportunity for my little disclaimer. As always, this is not financial advice. I am not a financial planner. In fact, I think I am probably the biggest idiot in the world. So do not listen to me. Please don't listen to anybody on YouTube when making your financial decisions. You really need to do your own research, reach out to a financial planner, but you need to do what makes the most sense for you and not listen to any of us. This is just entertainment purposes only. But that being said, I think really what happens is the people that are invested now, and the reason the crazy stuff goes up so much, is they have to hit it out of the ballpark and have those stories of, oh my God, I put $5,000 in this thing and now it's $200,000, to start attracting the people who don't typically invest, because once they start hearing those stories is when they finally jump in. So when you go to dinner and the waiter or the waitress starts talking about some new AI stock that they're investing in for no reason that you didn't prompt the conversation, but it just seems to be what people talk about, that's when we've really gone too far. Outside of that, the market tends to go higher, and timing the market is less important than time in the market. So, if PE ratios are a little elevated right now and they go back to normal or a little bit low, that's just the ebb and flow of a market, and I don't care and I don't want to make any changes based on that. But if it gets to where everybody is investing and it's just like a total mania, absolutely, I would want to take chips off the table and put them on the sideline. And then I would wait for it to be a terrible recession, a crash, a collapse the other way before I really wanted to get long and get back in and look for those bargains to get in. I think the reason that somebody like Warren Buffett gets out too early is his positions are so big and he has to trade such stocks that are so liquid that it's hard to really time it the same way. Where you and I have a big advantage over some of these big funds about being able to move quickly and make decisions. So, for example, today looked rather scary to me on the open. At the same time, I saw that as an opportunity. I looked at the prices of things. I saw they were retesting those Friday numbers. So I figured I'd take a shot. I picked up a couple of things with a really tight stop order, figuring, if it follows through and we start into a recession, be very careful. And here's the main point of things like today as to what to be careful for. You're going to find that people are going to end up getting really complacent. These down days are just going to become this buy the dip, buy the dip, buy the dip, to the point that there becomes no fear and you stop having the dips. That's when you're really going to suck everybody in. When everybody is so confident that you always just buy the dip because it never goes really bad, is when it finally will. So don't hear me the wrong way. I am still bullish. The trend is your friend. I am not ready to fight the tape. I'm just keeping an eye, waiting for the mania to really pile up for that opportunity that I'm hoping comes. And here's the funny thing. I don't really hope it comes. I hope it doesn't. We are much better off if we have a legitimate 10% correction now, things slow down and the market just behaves normal, than the big parabolic move that I envision coming over the next couple of years. Because the problem with what I envision coming over the next couple of years is if we go parabolic and it pops, we'll have a recession with it. It won't just be stock market. That's the problem with it having a big boom and bust. And it's also the reason that if I see what I'm hoping for or what I think might come, that I want to be aware of it because I don't want to get caught when it pops if I see that. Now, in the meantime, it isn't what I see now. Again, not financial advice. Let me know what you guys think. Do you think we're about to pop? Do you think we have a long ways to go? Or do you think this is just normal ebb and flow of markets? I'd be curious your thoughts on it. Anyway, thanks so much for watching. Do me a favor if you haven't already. Hit that subscribe button, smash the like button, and make some comments in the comment section. Have a great Tuesday. Have a great rest of your day, and I'm sure I'll talk to you guys in the next day or two.